Okay, so we're looking at this technical picture since last Friday. We have to understand the fundamentals behind it is that the United States dollar is going to become a risk adverse asset against the yen, and this is a bit tricky because the yen too is a risk adverse asset. Once all this bearish sentiment regarding the current breakout of the mutated virus settles or clears, you are expecting that this issue again will become bullish. It is a bit, let us say, jumping the gun if we would consider that it is a bullish right now, because we're considering, of course, that it was bullish last week. All right, in order to be able to track when it's going to break out into a bull trend, we have to actually understand perfectly well this current plot. So that was the higher degree motive advance wave in the market. The higher degree motive advance wave will give you leadway into the depths of the correction and how far it can go. So that is, of course, a way for our chart. This is updated until the current market action today. This is where we are today, actually, right at that point, bouncing in that 4A. So we have here a higher degree wave 1, there is a 2, internal 1, internal 2, internal 3, internal 4. That was a higher degree wave 3. That 3 did a wave 4A last Friday. We were expecting more dollar strengths as of this week because there's going to be a lot of cash flow into the dollar due to risk aversion. So the market did a 4A. It doesn't really have to do a 4B to equate with the top of 3 and then bounce back into a 4C and then move higher into 118. And as this trade management picture shows, the current motive wave shows that if the risk aversion will still be sustained by the market until the end of the week, all right, we are going to be seeing a very muted 4B. You're having a head here, you're having the right shoulder, you're going to have another left shoulder. That 4C will take you down all the way to level 1, 111.5, internal level 1, of course, and even lower level 1, 110.65. So we cannot make up our mind at the moment seriously if we would want to go long or want to go short. The only thing we could advise is that if you're already long at maybe 114 and 114.30, you want to get out on a retraction. That 4B that you're seeing now is going to be doing these same shoulders here at around 114.5 and 114.4 before it does a 4C. Otherwise, we would only want to commit buy long this market if we get to see these levels, 111.6, 110.7. We will wait until the dust settles. There's still going to be more risk aversion, especially against the yen. So the United States dollar should depreciate against the yen. We'll probably see double heads and shoulders and break to that neckline or that neckline lower. So we'll only long at 110.7 or 110.4 and 112 or 111.6. This levels here, that neckline. If we're already holding longs, we expect that we're going to see the same head again tested in wave B, 4B. That's what you're seeing here. We're not going to go up right now, so the market's not a buy at that level. It has been amended, even though this is today's chart. It's no longer a buy at 114.13 because the momentum picture is still very weak, so we don't want to be bogged down and commit to that position. So again, if we're long at 114, I believe we were long at 114 plus levels, we would get out on a retraction. We're going to be seeing that shoulder. You have a shoulder here. We're going to be seeing another shoulder at 114.3, I believe, and even 114.5 and even 114.6. Clear out longs there, and then have entry limit longs at 111.6, 112 itself, and there's also possibility to see top of level 1 here is going to be 110.6. We will not short at this point. We will not short unless, of course, we have a trigger, but we expect it's still a corrective trigger. It is most probably still a corrective trigger because on the 4-hour chart we're bouncing out of that oversold levels. Okay, so we're shorting sterling against the yen, and if we add by shorting the dollar against the yen, we are just increasing our risk. So it's best to stay short only the sterling against the yen. On this issue here, it is corrective, and once that fundamental picture changes, or once the markets begin to consider that fears regarding the current variant of the pandemic are unfounded, or are a bit over expected or overreacted to, then there's probably going to be a bounce, and we want to be ready to get into that bounce. Right now it is too early, so we just get out of the shorts. We would not again consider to long unless we are at very high levels, and it would be a bit short. It would be a bit risky because we expect that probably the market within the coming 2 weeks will get to consider that the picture regarding the pandemic is not that dismal, and that this is a bit overreacted. That is okay. Alright, so with United States dollar against the yen, you would want to stand out. We don't want to do trades at the moment. We expect we're going to be seeing lower levels all the way down to 112. Remember, we just shown these levels right here. You're going to be seeing 111.6 to long at. You're going to be seeing 110.7 to long at, and 110.5 again to long at. If we get corrections all the way down to these levels, we long at these levels. At that point, we're seeing, of course, heads and shoulders, but we would long at these levels because the market gradually would be rising to do another head. If we are long at higher levels, if we're already long at 114.3 and 114.6, we will have an entry, take profit at entry, so that on a bounce, current market is doing a 4A, it should do a 4B. We will get out at break even and bail out of the position. This is what we're currently seeing now on the market. You're seeing, of course, indecisiveness, and you're just seeing that correction B. So that correction B is going to be very choppy, EBC. The market still needs more time to consider that it is actually overreacting regarding the current variant. Even on the shorter term scale, when the market does discount this, you'll find that it has moved a bit higher, done a second head, and we can close out these long positions.